Alright guys, you're all welcome into this video. On this video we're going to be talking more about market structure. Many of us know, so many traders they don't know much about market structure. They only jump into markets before they can plan their trade. On a retail market, we don't have to do that. We have to plan our entry and talk about market structure. On this play sheet, we'll be using an example of market structure before we'll be going into our entry. So right now on this play sheet, we'll be taking out some real life charts, and we're going to start it from market structure, which is this market structure, right? So using an uptrend as an example. That's an example, right? So we're using an uptrend as an example. This uptrend, many of us know that uptrend is creating higher high, higher low, higher high, higher low, higher high, higher low. So this is an example of an uptrend, right? So this is an example of an uptrend. So this is an example of an uptrend. This is an example of an uptrend, right? It's an example of an uptrend. So you can also see an example of an uptrend like this, right? All this quick liquidity, create higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So this is what market really does. So I'm going to use this as an example of an uptrend market. So this is an example of an uptrend, right? So the trend take time, consolidate, move, and all of that, and boom, back again to a previous level. So alright guys, this is an example of an uptrend, right? So in this, okay, let's give a little expansion so that it can be more clear understanding for us, right? Let's give a little clear more expansion. A little clear expansion so that it can be more understandable. Alright guys, this is a clear example of an uptrend, right? So on this, what we're going to be doing right now, we're going to be looking into market structure. First of all, where the trend is going to be heading to, right? And where is the main side of the trend, right? Market structure call it liquidity swipe off before we move or compare consolidation and all of that. So in this video we're going to bring more of that, but first we're going to start from the uptrend, right? So from the uptrend we have the market left side, we have the support. According to market structure, we have the support, 3 touches from this previous level. So we're going to be marking it as we have touches from this level, which is known as equal low. We have the support. This has now become support, right? Support level. So on this support level, we also have the higher low created around this block. We have the higher low created around this block. We have the higher low created around this block, and this connects to liquidity. So we have this resistance level at the top side, which price when it's tried struggling for is able to break above it. So we have this level, which is this resistance level. Sorry guys. On this resistance level. For this resistance level, after price break above, we pull back again into this particular push. This is known as pull back, right? So this is how you can put it to the market structure. This level here is a pullback, and here is a break, right? Here, this level is a break. Price break above. Price break above this neckline. This level has become a resistance level, also known as a neckline, right? Also known as a neckline, also known as a resistance level. So price break above a resistance level, pull back and hold above, which creates a pullback for us. And after the pullback, market swap into the same level which it did on this particular level. So price trap here, and go here to the top side. So this is now become a new resistance to the market. So price pull up, which is known as higher price, has already been accepted. So on this level, we have the support and we have the resistance. So price trap into this level 1 to 2 and give us upper high push to get on this particular level. So we have the 1 touch, we have the 2 touch, and we have the 10 touch. The 10 touch break above from the big breakers and break into inside again. After breaking into the same level, you now come back and create same support level on this particular chart. This is how market structure really works. Market pulls up, accepted higher price, and it creates new higher level. So these are now become our new resistance level on the market structure. So we now have this level as a resistance level, which we can pick it up right now. We now have that level as a resistance level. Price came back again, free to trap the same level, and we started bring that very soon. So for now, after price break above, we have this minor liquidity here, which is created around this level. We also have this one created, also have this, which is 1 here, 2 here. So after price break above and put up, you see the new resistance level, which is touch. Sorry, resistance level, which is known as supply zone. PSL as dominate, right? PSL as dominate. As the support zone, this is where buyers buy from. They buy from this level and the price keep on going up, which they keep up into higher low. So right now we have the first touch on this particular level, which is the touch, and we have the second touch, and again this should happen to be the third touch on the new resistance level, right? This should happen to be the first touch, so the third touch on the resistance level, but we have a little respect on that level. So what we're going to be doing right now, we're going to be picking the lower low which we have on this previous low. We're going to be picking the lower low which we have on this previous side. So let's see where that lower low will be taking us into. We're picking the lower low from that spot, where price will be respected. And so good. So pick our lower low. You can see this leg which market all the way from which are the first touch, the second touch, and market pull back and we have internal liquidity. There's something we call internal liquidity. If you don't understand internal liquidity, you can easily drop a question on the chat box, right? So we can teach you more what is called internal liquidity. So market creates internal liquidity resistance level. This is called internal, right? Internal liquidity, right? This is known as internal liquidity. So market creates internal liquidity. We're capping this previous level from the bullish side push it created. So from that level, we're capping this level to this level. Price have never come back again. What price are we doing? Price creates a higher high. This is known as ish higher high. And this again higher high, so and this again. So price has not been respecting this particular level. So we can see that price has not been respecting this structure. So price has not been respecting this structure. So we cannot see that this level has been accepted by buyers over bought, and this level is now becoming over bought again. So right now, what price is currently doing, and you as a trader, we have already done your analysis as we are currently doing in the charts. So what we really do right now. So we have internal liquidity resistance at this level, which price is currently sitting on. So we have the internal liquidity resistance level on this particular block. So all we want is just for price to swap off one so that we can go right. So price are creating higher low, right? So this is our zone. We have one touch, two touch. So one touch, two touch, and the third touch. So any pull up from this level into this level, on this main liquidity we have 1, 2, 0. So any pull up again into this level, we're going to be expecting a proper break from this angle. So we're going to be expecting a break above. We're expecting a break above into this zone. We're expecting a break into this zone. If market fails to break above this liquidity, we're going to be swapping back again into this low and into this low. So we're going to be having a pull top from this level. And this level going to be aligned with this level. But based on we have this level here and we have this touch, So we're going to be expecting price back into this range. So what I'm likely going to be doing, I'm going to be accepting this level as my entry, right? Price sitting around here. All I have to do, I'm going to be getting in here. I'm going to be placing my buy here. Then my stop below this level. So my stop loss going to be around this level as my stop loss. Stop loss around this level. So my entry going to be around this current price here, and my stop loss below this level, below my main range. So any fake cards hitting below this, any fake cards hitting back into this level, I will not be stopped at 5 because my stop loss is below the previous market structure on the left side. So right now my take profit going to be a same high on this level. So I going to be buying here, stop loss here, buying here, stop loss here, and here going to be my take profit because that is the next magnitude of the current price, right? So here going to be my take profit. Alright, so this is an example of an uptrend. So Monday we're going to be going more into a downtrend. So the next video we're going to be talking more on downtrend, right?